Okay, let's dive into a fascinating analysis today. And a quick thank you to stocktelescope.com for providing the source material for this deep dive.
Absolutely. And, it's really important we state this clearly, just like stocktelescope.com does in their report. Everything we discussed today is based only on their analysis of Applied Digital. That's ticker APLD.
Exactly. So this is absolutely not investment advice.
Not at all. It's purely informational, just breaking down their report so you can understand the content they put out there.
Right. So our goal here is just to unpack this source, see what insights we can pull from it. And the main story stocktelescope.com seems to be focusing on what's Applied Digital and this massive deal they see as a potential game changer.
That's definitely the headline from their analysis. It's this $7 billion CoreWeave deal. According to the report, it was announced June 2nd, 2025. It's structured as two 15-year lease agreements.
Wow, $7 billion. That's,
Okay.
I mean, the source calculates that averages out to something like $467 million in annual revenue just from this one contract.
Yeah, over the whole 15 years. And that's precisely why their analysis calls it a game changer. It just fundamentally shifts APLD's financial outlook, gives them huge, predictable, contracted revenue.
Like more than double their current total annual revenue, right?
Yeah.
Just from this deal alone.
Exactly. And maybe just as critically, the source sees it as Fortune 500 scale validation for APLD's whole strategy.
And that strategy itself is a big part of the story. APLD, they started out heavily in crypto mining, didn't they?
They did, but stocktelescope.com really details this sharp pivot they've made towards AI infrastructure hosting. It's a major shift.
And the stock's performance kind of reflects that whole transition, doesn't it? The source notes its high volatility highlights a beta of 5.87, which is, way more volatile in the market, significantly more.
Okay, this huge recent jump, up like 361% from its 52-week low around when the analysis was done. Clearly a high-risk territory, according to the source.
And their report also dives into the financial background of this pivot, because building these giant data centers isn't cheap.
So the source notes high total debt, around $689.1 million. That contributes to their financial strength ranking, which the source puts at only 4 out of 10, mainly due to that leverage.
Okay, but there's another side to that coin.
Yeah, the source points to positive adjusted EBITDA in Q3 2025, about $10 million. So operations turning profitable on that adjusted basis. And they mentioned recent financing, like $375 million from SMBC.
Ah, so capital is coming in to fund this huge build-out needed for AI.
Seems that way, yeah. It suggests they have access to funding despite the debt, which is crucial for this kind of infrastructure investment.
So given this pivot and the market, what strategic advantages does the stocktelescope.com analysis see for APLD in this, really competitive AI space?
They highlight a few key things. First, the purpose-built nature of their infrastructure. It's designed specifically for these power-hungry GPUs used in AI. Things like liquid cooling, high-density power, stuff you need for complex AI models. Then there's the location advantage, North Dakota. The source cites benefits like lower energy costs and, natural cooling opportunities, which helps with efficiency.
Okay.
And also just the sheer potential scale. They mention over 1 gigawatt of power capacity being studied at their Ellendale site. That's a massive amount of potential growth the source sees.
And it seems like big names are noticed. The analysis mentions institutional validation, right? Names like NVIDIA, Macquarie.
Yeah, NVIDIA, Macquarie's commitment potentially up to $5 billion, that SMBC financing we mentioned, and of course this huge CoreWeave contract itself. It adds credibility.
And this isn't happening in isolation. The source puts it all in the context of this, exploding global AI data center market.
Yeah.
Projected to grow from maybe $15–17 billion now to potentially, what was it?
$93 to $157 billion by 2034, according to the figures cited in the source. It's a huge wave APLD is positioned to potentially ride.
But it can't all be smooth sailing. StockTelescope.com flags risks too, right? What are the main ones they point out?
Primarily execution risks. That's building these complex facilities on time, on budget, technical challenges, managing rapid growth. It's complex stuff.
And the financial risk. With all that debt.
That's definitely there too, the high debt load. However, the analysis argues that this big CoreWeave contract, with its predictable long-term cash flow, actually significantly reduces the risk of financial distress.
Okay, so it provides a kind of foundation, despite the leverage.
That seems to be the source's take, yes. It offers a buffer.
So bringing it all together then, weighing the opportunities against these risks, what was StockTelescope.com's final outlook on APLD in this analysis?
They landed on a speculative buy recommendation.
Right, and speculative feels like the key word there. They outline, significant potential upside,
Mm.
a 12, 18-month price target range of $18-$25.
With a bull case even higher, maybe $25-$35.
But they balance that against a potential bear case like $6-8 if things go wrong with execution.
Yeah.
So clearly presented as high risk, high reward.
Exactly. Suitable for aggressive growth portfolios, as the source puts it.
So let's tie this back for you listening. Why is digging into an analysis like this from a source like stocktelescope.com actually valuable?
Well, I think it gives you a really concrete example of how huge deals like this CoreWeave contract intersect with major market trends like AI
Mm.
and a specific company's strategy and financial situation.
Yeah, it shows you the factors a source like this weighs when looking at a company in a really fast-moving, high-stakes area like AI infrastructure. You see both the massive potential upside and the significant hurdles they identify.
So just to sum up this deep dive into StockTelescope.com's analysis, they basically view the $7 billion CoreWeave deal as a transformative event for Applied Digital.
Right, positioning them right in the middle of the booming AI infrastructure market. It brings huge contracted revenue validation.
But it also comes with substantial execution and financial risks, making it, in their view, a high reward but also high risk play.
And let's just say it one more time. This was purely a breakdown of one source's analysis. It is absolutely not investment advice.
Couldn't be clearer. Okay, so thinking about everything, StockTelescope.com laid out the potential, the risks, this big transformation they describe. What specific piece of future news or progress they mentioned do you think would be the most critical signal for APLD's path forward, based only on what's in their report?
Yeah, is it hitting that Q4 facility completion target they talked about?
Mm-hmm.
Or maybe seeing specific updates on how that debt level is changing relative to the new cash flows? Definitely something to mull over as you digest their analysis.